Hey everyone, welcome to your daily update for SOL and BTC. Yay, we got a pump finally. So since about the 17th, I've been saying that we've just had these really sneaky bullish signs. We're down at an area we should be pumping. It was actually starting to get a little bit mentally frustrating because you're sitting there staring at the chart, going, "Why are you not going up?" And I think a lot of it's probably just getting tied in with monthly close. Like we're getting closer to monthly close now. If they wanted to do a rally, which sort of makes sense given that we've hit the bottom of the monthly distribution range, like you really just can't drag it out much longer. They kind of had to do something within this window as we get close to the end of the month. Otherwise, they could end up creating structure that doesn't allow them to do what they were kind of implying they were going to do. So here we are. Now, liquidity, of course, is changing on the lower time frames. I've just looked at it like this at the moment. You can see everyone's chasing the pump, which is not ideal because if you're opening longs with your liquidation at $89, you are literally got your liquidation completely within the entire retestable zone. So you don't really want to be doing that, but people are, and that means we might get those retests. So there's also people starting to open shorts, and I need to be super clear on this one. We're running into really, really big resistance at these levels. It's huge. It can definitely send us to lower lows from what we've just seen. Things like 40K, etc. for BTC. But it's really big time frame resistance as well. And there's lots of refined levels inside of this. So you got to look back to, say, best example that I've talked about numerous times and done some videos on is things like when SOL first started going up past about $150. We knew that it was going to come down. I think it might have been $180. Yeah, we knew it was going to come down, but there were all these refined levels in it, and it wasn't until it got to 253.2.427 or something that it was the absolute last of those refined levels. It went all the way to the top of the range, and then it hit the final one. There was nowhere else to go, and then the next thing you know, it's dumpy town. So we've spent quite a bit of time down at these low prices. And in that time, what's happened is really big engulfments on high time frames have been getting created above price. And as of hitting 68.8, which is kind of where we are now, as of hitting this little area here where it's going sideways, we've just entered some really high time frame resistance. And it can go up, and keep going up. And if people keep shorting it, they'll probably just keep taking the shorts. And you might get some flushes and all that kind of stuff. And it may even get to the point where everyone's euphoric and they think that it's a super cycle or whatever, and it's just going to keep on going. But at some point, they're going to hit the refined levels that are inside here. They're going to hit the backside of trends that they've just closed under, and they're going to come back down again. So it can happen pretty much any time from now on. So just be really careful with your longs effectively. We are now pushing into resistance. What we want to see is we want to start to see like the 1 days and the 2 days and just stuff like that start to break trends. And then you can take smaller longs inside the bigger move. And we have got a lot of minimum obligation moves still to play out, which kind of imply there's a really high statistical chance of us getting at least to 75K in this rally. And then beyond that, the probability is reduced. So yeah, we'll see how it goes. Let's have a look at SOL BTC. Okay, so SOL BTC here on the daily. We've got a few closes today, some on the exchange, some on TradingView. Actually more on TradingView than we do on the exchange. As for where SOL BTC is sitting, it's a pretty big pump. So it's gone up into the hold on the daily, and it's sitting at the third level of the range it created yesterday. So I did mention that this is was a pretty weak top, just single candle, single candle, single candle. There wasn't really any kind of distribution range going on in here. We had this little one down here which had been hard closed already, and then we just had the one that we created yesterday. But at the same time, we then created a range engulfment to go in the other direction. So What was going on, if you zoom out from this, is we were actually down here, we were actually bouncing off some weekly supports on the totals. We were bouncing off weekly supports on SOL. There was a lot more support down here than kind of what the daily showed. So that then creates this big move. And someone asked in the Discord the other day, or they say they're confused on which timeframes to trade on. So you've really got to look top down. Like a huge pump on the daily like this, which is impressive, is really just something on a bigger time frame. So as we draw close to the end of the month, I'll show you where is the monthly. So as we draw close to the end of the month, you can see we've wicked through from the top side monthly range levels. We've bounced off the top side of monthly trends, and then you can capitulate down here for a really long time, basically, like in this case 27 days, but eventually you're going to start to move up, and that's kind of what you're seeing when you look at the lower time frames. And that kind of creates a complete reversal, as you can see on the weekly, which because the monthly is trying to move up, and it's all just relation to how much time is there left to go, and you can really only stay down there for so long before you start to move. Okay, so closing today. Well, if we can close above 13094, which would be the range level, but also that means up inside the hold level, that would be quite bullish. And then I'd be looking to get some kind of continuation. And then really the next level is to break out of this range and get back inside this really big one from the big dump. And to do that, we need to be up over here, which is about that 13424 level. So next couple of days, if we're up over there and still moving to the upside, then you're going to get continuation. Right, let's have a look at the safety assets versus risk. Yep, so as you can see, that therefore this looks completely the opposite to what you've just seen on the SOL BTC chart. So it means money is actually moving into risk. The hold got created yesterday. We closed back under the break, under the trend, under the break, under a range trend. So I mean, there was a whole heap of resistance. If that was to push up, this was a pretty inevitable dump. And still quite surprised by the size of that, the way it's just gone through all of these levels. But hey, the chart is what the chart is, and like we just said on SOL BTC, it'll be related to something bigger. So this is any kind of close down here under that 69.58 or under that range trend. Anything down here is good. And if we just have a quick look at the bigger time frames, yeah, you can sort of see you're really just rejecting off a weekly range level, and you're starting to move towards doing the retests of the broken break levels and origin levels, which is kind of 69.39 and 68.43. So if this gets a weekly close down into this next range bracket, then it'll probably just keep on trying to push down, which is looking kind of bullish for a bit of a rally. And monthly is rejecting off the backside of the trend, it's rejecting off the range level. I mean, they went all the way up through there for quite a while, back up into the hold. Possibly even came from the wrong side of the range trend as well. So 3 days to go. This is just doing what it's doing. Really what it's going to be is how does it close? It's either going to close in a position where it can utilize this for support and go for a pump again, which then it's game over for risk assets again, and they'll have another pullback, or it's going to get continuation down. And if we keep pumping for the next 3 days and start to get closes under these 68.05 levels, then it can kind of be game on really for alts, because as you can see, we are very high up. Like this is your bear, effectively, complete bear market, and then that's your bull market as far as risk assets, and we've just been grinding back up into here, and so this is pretty high up. So we'll see how that plays out in a few days. Let's have a look at the totals. Okay, so anything over 206 could be quite bullish. There's areas to retest. Not really hard closing anything, and a close over 212 would be a lot better, but doesn't mean it can't do it in the next 2 days. It also, like, just from a bearish perspective, if we open tomorrow having not hard closed really anything in this, and we push up to that 212, reject off that origin, we could come all the way back down to this hold down the bottom here. So that's probably just something just to be a bit wary of. Close under here still means pending resistance pretty close. But other than that, aside from the fact that it just delayed us for a couple of days down here, it all looks pretty right. And I would expect it to push up to that 212 after it opens the next candle. Then we would have moved from the 189 origin, or 1.89 trillion origin, up to the 212. So that's looking like it's finally doing what it should. It's been a kind of a frustrating few days, actually. Just, when you hit things like these levels, this 1.85 trillion on the weekly, you just know that you should bounce back to 202. And even like I've mentioned in the Discord a few times, that it just seems like they're trying to induce shorts, and there's just been these minimum obligation moves that are really high probability where the price should have gone up, and just none of it's been happening. And it's hard not to question yourself sometimes when you sit there and you look at it and you go, why is it just not doing what it should be doing? And then, yeah, all it takes is one day and bang, off it goes. So we'll keep an eye on this for the weekly close, but if we do get a weekly engulfment in here and create a new range to the upside, that could be quite bullish. And anything over that 2.1, 2.12 for the weekly is going to be quite bullish. Monthly, I've done a few posts about this just on X yesterday, but that is now a completed distribution range on the monthly. And once again, the important thing is that we recapture these 2.1, 2.12 areas. We don't want to get stuck back under this old reversed hold because it could flip back to resistance. So ideally, we want to get back above there, and we want to get back up inside the break level for the monthly, and then we can get some continuation on the rally. But just again to reiterate, this rally is probably not going to be some magical new high. We're already showing signs that we've run into that 68.8 resistance on BTC. So yeah, just be careful. If everything turns euphoric, it's probably time to take some profits. Okay, and now risk assets. Risk assets is looking a bit better than BTC as far as its levels. Any kind of close over that 695 billion is very positive. And then we get a nice big air gap. So, we could get a pump. Any kind of close below that 695 billion could initiate a retrace, and nothing is actually hard closed down below. So once again, just fast up, fast down, remember that. And looking for this close to be outside of this range. And the weekly has performed probably more than what it needs to. So bounced off the origins, the range levels, and it's traveled back up to hit the one that it's hard closed. So it's now done the retest. So now that it's hit this 705, it doesn't need to go any higher, but if we close over that for the week, then it'll probably continue. And there's still levels there to retest that are slightly higher. So that's... And the monthly's finally starting to pull back up off the trend. So if you wanted some massive hopium injection for altcoins, first, this is the first touch of a monthly origin, and it came from the top side of a monthly trend. If it can get the month closed up over the prior broken trend, so just showing that that is still supporting price, so that means getting up over 700 billion, then it's also hard closing 683, so there's a 95% probability it'll come back and actually retest that. And it's also hard closing the range trend, so there's a probability that it can retest that. But more so, it's the first touch of an origin level, and we have never tested the monthly hold up here. So if you wanted a huge piece of hopium, this can actually find its way all the way back up to these 1.22, 1.29 levels up in this area up here, because structurally they have not retested any of that. So since it was created, so this is yeah, there is some hopium here, but we'll see how it goes. All right, let's check out SOL. Okay, so low time frame on SOL. I don't like this. So this candle wicked to the top side, well above average volume. We know there's resistance here. This could be the players who bought down here at 79. So this could be them unloading, in which case maybe we are not going to go too much further up. But time will tell. Now we're basically breaking through all these range trends, and we've failed to hard close over them. So there's about an hour and a half to go in the day, and really we need to see this get back up and close into this 90 plus area if we actually want to get back above all that low time frame support resistance. Okay, so yeah, we've run into some pretty old range trends. And hit a very old hold on the hourly. So that's, yeah, look at that hold. That was, so we've just hit the hourly hold that sent us on that epic February 5th, February 6th dump. So it's going to be interesting to see how this holds up against that. Holds up against the hold. Joke of the day. It's a dad joke. Okay. Yeah, any kind of close back up over 90.3, 90.4 would definitely be better than where this currently is. Right. Okay, hour 37 minutes to go on the 4 hour. The 4 hour might hard close the origin if it closes up. So we're really looking for a hard close of the 4 hour origin is going to require a close over 89.381. And we're still below that 91 break level. Yeah, 91.195. So on this 4 hour chart, like an epic close would be if it just went up and closed over 91.195. It's basically saying at that point, we don't care, we're going to go up. And this close where we currently are, if anybody was in the Discord when we had that origin breakout, can't remember if it was BTC or might have been in here. So this was our 80 origin, or it was actually lower than that, wasn't it? This is where we created the reversal, and then we broke. It was that. If you're in the Discord, I pointed this one out when everyone went, "What the heck was that?" Thankfully, in the Discord, most people now are not going, "What's the news?" because it's usually nothing to do with the news. But that hard close there of the 1 hour origin and then volume, that was just boom, up we went, and ended up retesting this broken origin from all the way back here in 20th of February. So that was where we hit and rejected. Now, fast forward to the 4 hour chart and today, and we've got this candle just sitting above these levels. So if this thing closes, there is some negative implications because it'll move the trend and the wick's too long, and so the resistance is closer. But if we then look at where is our next break level? Well, 91.195, but it's already been tested. We've got a break level up here at 94.460. We've got another one up here at 97. Now this one at 97 is the 4-hour broken origin. So could it come up here? Absolutely. That's if you just look at the relative volume pump you had on the 1 hour when you broke a 1 hour one of these, now consider this as a 4 hour. Relative volume pump, easy, could come up here. So we'll see how that goes. And of course, they have 1 hour and 34 minutes to troll it, bring it back below the line, change it to a blue candle, anything like that, and that's then not a break. Or not a hard close, I should say. Daily, sitting up over the top of the daily origin. I am pretty suspect on this move from a daily perspective. I mean, we're creating or converting this 77.456 level into an origin level today. Also, technically, if we can stay up for one more day, it'll 79.5 will become one. 78.942 already is one. So that's there's actually another trend in here too. Zoom out. Got to get that trend to pop up. It must be pretty old. There it is. Okay. One day when these indicators get released, sometimes if you just see trends in the middle of nowhere like this, just scroll out, zoom out, because unless the candle is included in the start point, it's not going to show it to you. But this was an absolute troll of a close yesterday. They closed just above the trend, as you can see there. And so then the trend went to attack the hold, and it's just blasted straight through the hold. So it's pretty impressive stuff, actually, when you watch that. Okay, so any kind of close over 89, I'd class is quite good. But there is risk in this because it's come up too fast. It needs one more day of positive price action. And then if it closes another yellow candle, there's two things about that. It hard closes the level, which is great, but it also hard closes all of these levels, these lower levels too, because of the way it's moved up so quickly, which means don't be shocked if you get one more day of pumpiness and then a day of big dump to do all the retests, because they won't technically be hard closed unless there is one more day of pump, right? So that's the daily. And next whole candle sort of starts around that 95 area. We know the most important break level that's on the SOL chart high time frame is 95.234. So those are just areas to watch as well as far as potential rejection or resistance. And arguably they're targets because the high probability of retests. So, all right, that's the daily. Let's have a look at some of the bigger stuff. Okay, so looking at the 56-day on SOL, it really it's a very dangerous spot. Okay, so just if you look back here, this is April 2024. We created a hold. We had a bit of a rejection off the hold. We flipped it, reversed it, closed above, and then it kind of acted as resistance the whole way through here. We managed to break through it, etc. And then it was at this point here where we hard closed back inside this hold, and then you can see we rejected that 148, and now we've traveled all the way down to the other reverse hold. So this reverse hold, well, in fact, we whacked all the way down into it, but this we're still under that, and we're about to close the candle. Now we haven't hard closed back inside of it, which is what happened up here when we were before we then rejected off it. So like these two particular candles and a couple of ones before, 1, 2, 3, 4, all of these managed to get back out of it and continue up. So this one could get up, but just if we spend 56 more days under this 92, it will be definitely a bad sign. The levels for this hold sort of come down pretty low, but it's more likely that it would just come down to do a retest of the unbroken break. So we've still got $48 targets, on the board for Sol, I guess is what I'm saying at this higher time frame. Looking at the 28-day. So we might be just creeping back up inside the range levels. So there's going to be a bit of a difference between whether we close above or below 89.7, 89.3. We are below the break level there at 93. We're below obviously that 95.234 break level as well. We're closing inside the hold from January. So that means resistance around 101. And we're back inside the March 22 hold. So that means resistance starting 94 upwards. So if it needs to really be up over these 89s, need to get out of here as quick as possible. That gives us at least some support at this point to try and push up into this. And time frame, 28 days. It can just keep traveling up, for 27 and a half of those and then dump down later. But that's long term still bearish, to be fair. Okay. Let's see. 14-day. They'll probably get a little bit more bullish as we come down, just based on how this stuff tends to work. So creating a very steep downtrend. It's going to open on the top side of it. It's closing inside the break. It's bounced off the range level. So yeah, there is a 100.4 level to do a retest on. So it's not that bad, but again, resistance still 92, 93, etc. What else we got going on? 8-day. Yep, nice bounce, getting a hold level, closing over 91. Yeah, closing over 91.195 would be pretty awesome. Just got to hurry up and do that though. And resistance is still 95 and 100. Seven-day bouncing off the break. Untested break levels sitting around 93. It's not hard close. Oh, sorry, it is hard closed. Yeah, it is a hard closed break level. So yeah, about 93, 93.4. Yeah. So the gist of everything I'm seeing so far is the bigger time frames are having some bad closes. The smaller time frames are looking a little bit more bullish, but yeah, it's kind of a rally from this point is a little bit doomed from the beginning. That's if they even let it go much further than where it is now. Okay, 2 days, same sort of thing. Or sorry, 4 days, same sort of thing. And of course, there is the option that BTC ends up dragging up Sol because Sol BTC chart is positive strength to Sol at the moment. And therefore, if BTC pumps, Sol will just cut through this stuff. So this 2-day is possibly the strongest short-term close that there is. So if it closes above that origin, which is currently situated at, where is that? 89 flat. So definitely staying over 89, but it needs 2 more days to actually be an accumulation to really hard close that. And if it does hard close that, then off it can go. Incidentally, if you want to see what happens when you hard close a 56-day origin, it's called bull markets. Check this out. Actually, it might have been on. Actually, I think it's on BTC. We'll have a look at that when we get to BTC. You can kind of see where we got the hard close, where we got the retest, and where the price just exploded into the sky. All right, let's have a look at the other closes. 22-day. We're already starting to pull back, so I hope it's not a troll close, but this is why you take profits into resistance. Ooh, my computer's just gone a bit haywire. Actually, even there's a really good example, which you can't see this chart on TradingView, but this level through here, which was about 110 on SOL. So that was an origin which we created back in January 24. Hard closed it in March, retested it in August of 24 was the retest, and then off it goes to all-time high. So that gives you a bit of an idea. And then later on, that level actually was able to hold as support again, which led to that second, but unfortunately lower high. And so now here's the bad news. This will be a hard close under it today. So could we retest it? Yes, absolutely. Could we stop short of retesting it? Also true. Because we're not just actually closing under that level, unfortunately. We're closing underneath some hold levels and also some range levels. So pretty much this chart is just saying that there is plenty of resistance from 93, 94 upwards is pretty much what it's saying. But it is also telling us we have a hell of a long wick, and that's the kind of thing you need if you actually want to create a bounce to a hold. So yeah, we could come up and retest these levels just purely based off the structure of that candle, and that could be our rally. Okay. 11K, 11-day. See. So the first hard close resistance on the 11-day is going to be this reverse hold up here at about 102. But there is range resistance that we're, from 92, 93, everything in there is basically resistance. So unless we can get up over that on the 11-day, then we're probably still not out of the woods. Let's see if the 2-day looks positive. Ton of structure. Yeah, so the 2-day looks good. Interestingly enough, too, the 2-day is now synchronized between BTC and other timeframes. It looks the same. So, sorry, synchronized between TradingView and other timeframes. Yep, so 2-day close over 89. It's a good start. Creating a range level. So the smaller timeframes are looking like they are trying to push up. The bigger timeframes are closing under resistance. So all that pretty much says is that the rally is doomed from the beginning, but you may get the rally as long as we get the close. And as it currently stands, these are snapshots that are taken, so they're not showing live price. As it currently stands, the live price has pulled back in underneath this 89 level, so I imagine that's going to become an absolute fight for the next hour and 15 minutes to see whether they close above it or below it, and that allows you to be short-term bullish versus bearish, depending on how they close that. Based on the current price at this very second, you'd have to be bearish, but who knows? Hour and 50 minutes to go. Right, let's look at BTC. Okay, so BTC on the 1 hour, so big pump. It left a lot behind, so unfortunately all these different levels that haven't been retested. And we have now rejected from that 69,227 origin there, and that's 69,082. So pros and cons. The pros of this is that we have an hour and 15 minutes to go. So if we can have a violent rejection, nice flush, and come back up in that next hour, then we could have a good close. If it just ends up closing below key levels because it just drags this out and keeps on coming down to do the retests, then that's going to be a little bit more bearish for the close on the daily. So created range trend, closed back under the break level on the 4 hour, rejected off the range trend, rejected off the resistance trend, which shifted because the wick was too long, and came from the wrong side of too much stuff. So short version is retests. We have hard closed 66.4 as a level, and we've hard closed a range trend down here around 66k. So yeah, this is the last 4 hour candle of the day. It either needs to do just a violent flush and then recovery, or it's probably going to want to try and come back down. And the longer this keeps going up, leaving these areas untested, the bigger the fall will be later, because that's pretty much how it works. Trends can just keep price moving up for a long time and leave things untested, but when the trends break, then price comes down and does the retest. Daily. So really want to be closing over 69, even 69,250 ideally, close over that. And then if we can, then that should be able to give a push through, more sustainable push through to 71.4k. And then if we can close over that for the next day, then 74. One way or another, though, we are creating a daily accumulation range here. So it's just whether it can get into that range, which means a close over 69.067, or whether we come from the wrong side of that. So if we come from the wrong side of that and have another really pumpy day tomorrow, it's just going to be a trap. It'll push up, and there's a lot of confluence around all these levels. So when we look at the higher time frame stuff, the real big stuff that's going on right now, these are all refined levels inside the really big holds. So 76 is basically where we run into the backside of a massive trend, and 80k, there's a 33-week hold sitting around 80k. So how this finds its way up, if it does keep moving up, tells the story about the fact that they then want to come back down. So just watch for these closes, and more sustainable closes, like I say, today would be over that 69,250 on the daily, and then less sustainable will be if we start from the underside and then keep pushing up. Okay, that weekly look. Yeah, and the weeklies hit the bottom of its range. It's bouncing off a reverse trend. Sorry, this is the monthly. Monthly has hit the bottom of the range. It's bouncing off a reverse trend. It's hard closing and breaking a range trend for that upper part of the range today. So yeah, there's definitely confluence with this pushing up to 74, 75, or maybe even as high as 84, because that reverse hold in there may try to target this reverse hold in here. So, and if it hit 84, then it's retested everything, including that range trend that's been broken today. Broken in 3 days. Getting ahead of myself for the monthly. Yeah, so monthly close down here would be bearish, but could trigger a retest. And then if it did that retest, I'm sure at that point people are going to start getting really bullish. They're going to think that we're going to keep going up forever. But what will probably happen is we'd hit the range trend and then we'd reject down to test these lower range trends down around 41. So yeah, 43 to 41. So if you start to see this and Twitter goes crazy about how we're in a super cycle, guess what? You're probably going to see that. And that could be in the next couple of months because algos are lazy. They love little crossovers like this because they can do two retests at the same moment instead of having to go up and down, up and down. So yeah, keep an eye on that one. Let's have a look at some of the bigger stuff. All right, so closing under the break level again, that's 74,466. But we are or have found support on the reverse level there. So closing over 64 is good. Some kind of move to the upside, maybe to retest that 74. It's all kind of confluent with what we're seeing across all the timeframes at the moment. Definitely would be better if we could sneak back over that 69,145, which is a pretty key level. But at this stage, we're sitting at about 68,365 at the moment. So we may end up closing over the top of the 67 level here, but maybe not over the 69. So that could trap price for a little bit. Same sort of retest areas. Yeah, it all just comes down to, do we get that last minute pump? And if we do, good. If we don't, they could reject quite quickly. So it could be a troll close. Looking at the 14-day. So we haven't hard closed these upper levels on the 14-day. And we're inside the break. So same story really as SOL. As we start going down in timeframes, what we're starting to see is a little bit more bullish price action. We're actually holding some levels, but we are closing potentially inside the holds unless we can get up over that 69 area again. So yeah, really good close today from what I can see is so far is going to be a really good close if we're up over that 69 250. And that pretty much stems from everything on the daily through to all of these high time frames so far. They're all in confluence. And then if we do close up over those levels, then we've got the 70k areas to deal with. But the 70k areas are more lower time frame resistance. So if the higher time frame stuff can close over the 69145, then we should end up pushing through some of those. Yeah, it looks like we're getting a hold level on the 7-day. So that's positive. We're creating a future in range origin at 66, whatever the lower that candle is, 65.593. 65.593 will be a new 4-day in range origin. So and there's actually one right there to test as well. So that's at 74. So 70,494. So what we're going to do is kind of create some symmetrical structure here where we basically have a level to test and a level to support. So if we get a push up through the 70,000 area first, then we could expect to pull back all the way back down to that 65 area, but it could also happen the other way, and that'd be quite bullish if they did some kind of violent flush in the next 4-day candle and then came down here, tapped that level, then you'd have a pretty clear target up in that 70k area. So 2-day. And if we can get a close over 68,232, which is really just where we are now, then we may be able to get a 2-day range kicking off. Which, yeah, okay. So that's not looking that bad on the lower time frame, but just like I say, bear in mind the pump is going to run into some pretty big stuff as it goes up. It already has run into some pretty big stuff. Okay. Let's see what else we got happening. Hard closing. So this is now getting into longer time moves, but this will be a hard close of the 76,562 origin today, and we are above the holds. We're above the reverse holds. We're slightly below the break. Okay, so there's two things that can happen here. We can take another nosedive and we can head down to this 56 origin, which sometimes happens. You hard close one origin and then the price just dumps and goes to the next. Or we could come up here and either just bounce between the break, back down, back up. It's entirely possible. So 72, 56, 76. Or we could come up here to 76 or push up above it even, and then push back down to hit that 56. So just more confluence around that area that there will be some kind of resistance. Yeah. Pretty much the same thing here on the 11-day. So yeah, just looking like we might rally to 76. Okay, the 2-day. So the 2-day looks the same. Trading view versus native closes. So that's just all the same. Okay, so the biggest time frame that we have in play at the moment for BTC is this. So I've shared this in the Discord a few times, but this is what everyone really needs to keep an eye on. So it's a very, very big minimum obligation 1v1 short, and so we've got a high time frame, high probability short, which is in play to 56k, and there's a lot of confluence with all these other timeframes we've just looked at to see why we might go to 56k, because you got origin rejections and all sorts of things above where current price is. But bigger than that, we have this, and this is both a long range and it is a 1v1 short, and we're on the wrong side of the trend. So what I think is pretty likely is that if we do get a rally, we're going to push up and we're going to run into this trend, and that trend is currently sitting around 74 or above, and we might push through it for a bit because it's a very high time frame, and we've got 342 days to go on this 344 day time frame. But one way or another, we're already at resistance, being 68,882. We've already got a range level that we've just like steamrolled into at 69.256. And this is a long range level, but because we've closed underneath that and we've created a hold and we're under the trend, everything here is just lining up to say the rally will come up into resistance, if it even does, because we could just reject straight from what we've already done today. We've already hit all of these resistance levels today. So yeah, the rally, if it comes up into here, is probably going to end up coming back down. Now we've already done a test on the really high time frame of this 54 level, and that was that bounce there where we first closed under the 69, came back down into the 54, and then went up to do the level 4. So although we've got these targets at 56, it's also kind of saying that now that we've got such a high time frame thing aiming to the downside, 43 is somewhere where I'd be quite interested to start maybe DCAing for next cycle. Just depends when we actually get there, but yeah, this is, keep this thing in the back of your mind as far as any choices you make. And if everyone is just goes absolutely euphoric all over X and that kind of stuff in the coming days or weeks, because we're pumping up to 70,000, and there's all these refined levels inside here. So if we if we actually break it down, up inside this wick, there's refined levels going all the way up to 120k. So, but given it's so early in the piece for this time frame, nothing stops this from pushing all the way through here, hitting those refined levels, and then coming back down. It all just comes down to how much liquidity they want to take from the upside, how much more they can draw in to sell into on the downside, and then yeah, the only way this ever recovers is that in 342 days, it's got to be clear of this trend, which means a price over. So this candle closes, got to be back up over that trend. It means that the price has to be over 90k in 342 days for this thing to recover. And that could even just be next cycle. You know, we might come all the way up here, reject all the way down here, come back up again because it's such a long time frame, close over this, and then bounce. So we'll keep that one in the back of your mind for now. And yeah, let's have a look at some of these others. So Tesla, all I can say is not surprised. Created the hold, opened above the 1618. So this is more or less like a short range reversing, and it's gone back to test the 1. So if it opens up above the 1, it might try to come through, break the trends, and keep going up to the origin up there at about 128. Failing that, it can just reject off this 1 and come back down again, test the 409 or the hold. Weekly, so finally kind of just doing what it should have done, which is bounce off the weekly trend up into the hold. So although this just stuffed around for several days, what you're seeing here is just the normal trade that you would typically look to take. Trend moves, first touch of relocated trend, established hold level, long, and TP. So job done. Now, if this does fully engulf, that changes things a wee bit, because what it needs to do to break this topside trend is it needs some kind of hold level to then work its way through. There's 2 ways it can do that. It can either close inside this hold, in which case this is actually a level capable of breaking an upper trend, or it can engulf this, or it can engulf that wick. So anything over 419 is quite bullish. 417 plus can still break the trend to the upside and keep going up, but actually 413 can as well. So that's and there's a pretty obvious target right there, which is a reversed hold at 446, and that one's kind of already, yeah, don't know. I'd probably take a TP there if it got to 442 anyway. So yeah, that's where that's at. How's that going to close out the week? MicroStrategy opened up above the trend, targeted the origin. That's a pretty strong looking close. Quite surprised actually that that's pushed all the way through there, but that's why I like 24-hour markets. Things like this can go from being under trend to magically opening above trend and then take off. So let's just quick look at the weekly. Yeah, bouncing off the weekly trend. I mean, it looks at this stage, other than the fact it's pulled back a little bit in post-market, it does look at this stage like it's going to try and target a retest of the range trend or even higher, because it's a trend break, so range trend, some kind of inverse resistance up here in the 150s, 154 could all be targets, or even the break. That does look like it's ready to break out on the weekly if nothing much changes before open. This is starting to pull back up. That's got ages to go, so not too worried about that. There is our origin bounce that we talked about the other day on the weekly market cap for SOL. So as long as it can stay above the trend, create the range, but ideally close back up inside that 51.22, that would be quite bullish if it can close back up inside there. I'm probably going to see a series of retests done to the upside if it can manage that. So that's looking pretty good. Now, if you watched yesterday's video, or it might have been the live stream, I said ARK is going to hit a break level, and when it does, you probably want to take some profits. And if it hard closes the break level, it might keep going up, but as you can see, it's run into the weekly break level. It's gone through and actually hit the weekly range level, so that's a pretty good push back from down here. But these things are just, this is a beast of a token. It can really move. That's a huge 38% today. But if you want to trade these, the thing is they're just exactly the same as everything else. They just move more, meaning that you can't necessarily use super high leverage on them because you'll probably get liquidated. But that's ARK's doing its thing. So weekly close for this, you could end up with a weekly range to the downside, and which could be pretty bearish. Is there any good levels in here? Not really. I mean, you got a weekly hold. We've got this hard closed level at 57.40. Might get a bounce off that. You might even get a move all the way back down. There's a wee bit of a dirty origin level just down here at 1584. So something down in there could create another move. Let's do it on the daily. Yeah. So that was your daily origin through here. Several hits, never broke. Hard closed that tiny little candle there. Whoomp, off to the upside. And straight through the break. Rejection from the weekly range. This would have been your daily origin here, so that would have been where you opened your long. Then when it cracked that, keep going up. So it's just kind of bouncing off that now, but it's not the first touch of this. This was the first touch candle here, so that was the one you longed. If this closes down under this level today, then it's gonna probably keep traveling down. And there is an untested, looks like an untested origin down here actually. Turn on the cheat indicators, eh? Just get rid of. There's a lot of stuff down there. Doesn't that just make life easier? Yeah, so if it closes under that 6189 today, then you might be able to catch it down in here somewhere. 3203 or lower. Expand that out so people can see the levels. Right. There's all your levels. So ideally what you want to find is origin levels that have never had a first touch. So this has been created, never had a first touch, versus ones like this one, which has already been part of the pump. So it was created in this gap here on the 25th of November, but the long is here. That, did I say 25th? 22nd. And then the long is actually this one here on the next candle. Then it's been hit again and gone again. So yes, it's good support, but the more times it's been hit, the less chance it's actually going to hold if it gets hit again, like any level. So, and this is quite a dirty origin through here at 3475. So any kind of 3475, 3203, I'd be interested in those levels. Not to mention just taking a pretty decent fib bounce off this daily hold. That would be quite good as well. So, and that one, they've been left behind for so long that they would almost certainly give a bounce. So, yeah. Let's just see if any of that lines up on the weekly. It doesn't really. So the weekly levels are much lower. So this is kind of that thing about building timeframes, like boxes as such. Like at the moment, your weekly origins down here at basically 1516 sort of area. And if we spend another week without revisiting this 106.05, then that would become the weekly origin at the top side. So you end up kind of building a box going, well, there's our weekly level up around 10 cents. Where's our next weekly level? Well, our next weekly level is going to be down here at 1.6 cents. That's a huge range. And then when you zoom in, that's when you'll find that the daily will exist inside the weekly, as will the daily will be higher up, which was about that 3 area. And whatever daily it's created will be lower than this 10 cent area. And then if you zoom down lower, you'll find that there will then be a 4 hour inside that, and then a 1 hour inside that, etc., etc. So whatever time that you've got to trade on effectively is the time that you then work it down to and then take your trade. But it's really good to mark out these higher time frame levels, because if you're just focused on, say, the daily breakout, you would have had no idea that that range level was sitting there on the weekly at 12 cents. And that daily breakout, daily origin break, just sent it straight into a weekly resistance, which is why you get such an epic pullback. Cool. Alrighty, that's us. like, subscribe, and all that kind of stuff. Haven't quite hit 1,000 subscribers yet, but we'll keep working on it. Yeah, catch you again on the next one.